Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the slightly late running, my apologies, Monday the 15th of July, Bull versus Bear webinar. Steve Miley here on the call for trade day. Welcome, everyone. We'll go through our slightly different run through for a Monday morning, where we also take a look at the shape of the week. We look at the bigger picture, macroeconomic, fundamental, geopolitical events shaping in financial markets right here, right now. Looking back on those for the last week, and also looking forward to this week. Why do we do that? Well, pretty much because even though we're day trading at trade day, as I regularly say to you guys, even though we're day trading at trade day, I think it's a good practice to go through, see where the potential volatility points are in the week. It might mean that you adjust your trading strategy slightly through the week, depending if it's going to be more volatile at different points in the week. So you may look for bigger targets and wider stops on a more volatile day. You might look for narrower targets and narrower stops maybe on a less volatile day. It might be that the more volatile days tend to be more trend driven days. Okay, so you're going to move in a direction or maybe two directions, sharply up and then sharply down, but they do follow some kind of trend, as opposed to maybe when the quieter, less volatile days, where we might see markets more in a range consolidation, mean reversion type trading, and you may slightly adjust your trading or not trade depending on your trading style due to that. Okay, we're going to kick off first of all then and look at the macro matters and weekly recap. So the macro matters is below you in the three pillars of educational content and resources, or research. Sorry, not education, research content. We have the left pillar below the video you're watching now, a couple of panels down, I think it is. We have the left pillar being the technical analysis reports. We have the middle pillar, the fundamental reports, and the right pillar being the news reports. So this comes in the middle pillar in here. I only just updated it, forgot to upload it yesterday. It was ready yesterday, but forgot to upload yesterday. So I uploaded it this morning, so you can go and get that today. It's also on the main tradeday.com site, but we've also got the weekly recap and outlook. So we'll run through the weekly recap and outlook. Actually, I'll just run through the bullet points here. So US stock averages did hit record levels, but that was in a rotation. So you saw that the NASDAQ didn't do so well. NASDAQ has been the leader up. Growth stocks have been dominating. AI stocks have been dominating. NVIDIA have been dominating. You know that the NASDAQ's up, where is it? 22% in this year to date in here, but it was only up 0.2% on the week last week, whereas we had the S&P up just under 1% on the week, and the Dow actually up 1.6% on the week in here. And definitely we saw the Russell as well do particularly well. We spoke about that last week. The Russell 2000, the mid-cap stocks. So we've seen basically a catch-up, a narrowing of the gap between the growth stocks and the value stocks, rotation out of growth into value, into and out of large cap into mid cap, small cap, and that's just due to the fact that as we see the inflation prospects doing better in here, we saw that with the CPI data, which I'll come to shortly. Then it allows for maybe a broader recovery. Okay, so generally speaking, though, lower interest rates do favour. The growth stocks. However, given that we've got inflation continuing to cool, the economy is still doing well, then that portends for a stronger, more sustainable global recovery, or sorry, US recovery and global recovery, but US recovery. And also, as inflation cools, that's good for the whole economy. Hence that rotation that we saw, particularly after the CPI data. So we saw initially all markets move higher, than the tech we saw like a bit of a buy the rumor, sell the fact kind of move in here. So buy the rumor, sell the fact. The data was better than expected. Growth stocks are very, very, very overextended because of the big push that we've had up, particularly the likes of your AI stocks, particularly the likes of NVIDIA. So we saw a sharp correction on Thursday. They did rebound back, as we did discuss on Thursday. US inflation calls, we've already kind of touched on that anyway in here. So obviously the US inflation outlook better on Thursday after dropping again on both, better than expected in here for the less food to the core and the headline data. Yields went significantly lower on the back of that after the CPI, and also not only long-term yields, but also we saw the anticipation of now potentially 2 rate cuts from the Fed, maybe even 3 rate cuts from the Fed. Looking at now potentially September and December, and maybe even in between as well at the November meeting. So potentially 3 rate cuts. Certainly they're looking very much the market pricing in for 2 rate cuts, with the first rate cut now pretty much nailed on for September. US earnings kicked off on Friday in earnest with the financials. JP Morgan, Chase and Wells Fargo and Citigroup and Bank of New York Mellon. Mixed results there. Mostly we saw those major stocks down on, even though the mixed results, but even though the results were mixed, we saw like JP Morgan was down 1.2%, Wells Fargo particularly negative down 6% in here, Citigroup 1.8%. So that wasn't a great kickoff to earnings season, which we'll talk about shortly as we go forward. And then the elephant in the room, which I haven't mentioned yet, obviously, was I'll talk about Biden quickly, and then we'll get to the big news that we had. But Biden again putting his foot right in it, as they say. Further gaffes in here, calling President Zelensky, President Putin, the Ukrainian president, and also referring to Vice President Harris as Vice President Trump. But that's kind of been overshadowed by the assassination attempt on Saturday of Donald Trump. Former President Trump. He was hit, obviously. He's all doing well now. Obviously, I don't need to tell you guys any of this, I'm sure. But obviously, the shooter was killed, and also, sadly, there was a further fatality as well. What does all this mean for for us on the trading side? Obviously, I'm not going to go into. Obviously it's shocking. It shouldn't happen, no matter what your political leanings. This stuff shouldn't be happening in politics. So it's very sad in some ways, quite scary, I'm sure, in other ways. But also, what does it mean for us as traders? Well, it probably means some heightened volatility. It has meant this morning what we've seen is a movement in markets. Stock markets have liked it. Why the stock markets like it? Well, from the political commentators in the US and globally, the thoughts are that this will boost. Trump was already doing well on the campaign trail. Obviously, Biden was doing poorly. Biden was, I did see an article yesterday that Biden had started to turn a corner slightly, actually, ahead of the Trump assassination attempt. And then we saw, but now this has probably solidified Trump's position as becoming the next president of the United States. And the fact is, the market likes that. Republicans tend to be more favorable to the economy. Trump, will try to boost the US economy, isolationist politics. So stocks are up. We're seeing the steepening of the yield curve. So short end yields have remained lower, but longer end yields have gone slightly higher. That's because bonds sold off. Maybe bonds not seen as needed as a safe haven as much anymore, because there's seen as more of a security in Trump. So so we've seen yields slightly higher, although they're still much lower than they have been at the long end, and short end yields remain low. So a slight steepening of the curve, and stocks up in here this morning. Let's take a look at what's ahead. First of all, central bank side, we have the ECB interest rate decision on Thursday. That's going to take center stage. The other thing I wanted to mention, though, in here was we also get the Fed go on their blackout period. So if you haven't seen this before, I'll share this with you guys. Just putting this into the chat. Sorry, I didn't say hello. So we've got hellos from Stephanie, Jim, and Stefano. Morning, guys. Here's the blackout period calendar. So you'll see we go into blackout on this Saturday coming on the 20th. The meeting is on the 30th, 31st. Obviously, we're not expecting any changes at that meeting, but we could get some clues regarding the anticipated rate cut for September, but also how many rate cuts now. 2 certainly, market now very much pricing in 2. We'll come and look at the CME Fed tool shortly, but also now potential for a rate cut September, November, and December. But the important thing for us right here, right now, is this is the last week we're going to get any kind of Fed speakers. We've obviously had we had the minutes recently. We had Powell on the wires last week with his testimony to Congress. This is the last week of testimony, so we'll see if probably. I mean, they may get asked, any speakers may get asked, whether, the Trump assassination attempt changes anything for them. They're probably going to say no, right? They're just going to say they're reliant on the data. And we don't have any really big significant data. We have retail sales, which I'll mention shortly. So Fed go into blackout period. Going back to where we were, though, so central bank focus, ECB interest rate decision coming up on Thursday. We'll mention that as we get closer to it. Main macro data from the US is going to be the retail sales data. That we get on, I'll come to that shortly, I'll find it where it is in there. But we've got some fairly important data out of Europe. We get a lot of CPI data this week. We'll run through the calendar just shortly. The other thing to note is we get earnings continue in here. And if I go down to the tables in here, so US retail sales, so it's tomorrow. So we're focusing on US retail sales tomorrow. Nothing really significant out of the US today. And the other one from the US is not really huge, is industrial production. There's that ECB meeting. But we get some important, we get Canadian CPI. I think I list them up here. On the CPI data side, we get in here inflation data, UK, EU, Canada, and Japan. So we're getting some major CPI data releases coming up this week. If we go to the calendar on the earnings side, Goldman Sachs and BlackRock today, United Health, Bank of America, Morgan Stanley tomorrow. So continuing with the financials for the next 2 days. Then we get this ASML chip maker. So that's going to be really significant. Watching out for those. Johnson & Johnson also on Wednesday. And then a big one is Netflix, one of the FANG stocks, a reflection of the US consumer. Let's see how Netflix and the US consumer and global consumer saying that. So we'll certainly be watching for Netflix on Thursday. Let's take a look at all of those, going back to the calendars now. So if you look today, there's nothing really significant. Oh, you do actually Powell speaking later today, 12:30 today, and then daily at 16:35. These are both Eastern time. Okay, so Powell speaks at 12:30. Remember, this is the last week. We've had him on the wires anyway a lot. So is he going to say anything new? Unlikely. Are we going to listen? Yes, we still will be listening. 12:30 Eastern, Powell daily at 16:35. On the earnings, as I've said in here, the financials continuing. We've already had Goldman and BlackRock in here. So both beating on EPS, earnings per share. Goldman beating on revenue and a very slight miss on BlackRock. There is an article already up in here. BlackRock hits 10.66 trillion asset record, cites a boost in its ETS in here. Money managed revenue increased 8% from a year ago. So the data out of BlackRock, to me, that looks fairly positive. I haven't seen what it's doing in the pre-market in here at the moment, but that looks pretty positive, as alongside Goldman doing well as well. So we've already had the two out this morning. As you can see in here, the others, I'll run through them now because we're getting these before the open, so they're potentially going to be out before we speak on tomorrow's webinar. So tomorrow we're looking out for United Health, but then going back to the financials in here, we are taking a look at Bank of America, Morgan Stanley, and Charles Schwab, PNC Financial. Charles Schwab's the only one there. I'm not sure if that's before or after the bell, but the others are all before the bell. So they're potentially before we open up. Before we have the webinar tomorrow. Right, where else am I going with this? So that's most of that. And so you can go and take a look at more depth on the macro watch. And there's the weekly recap and outlook as well, if you want to take a look in that for a summary of all of that. Let's jump to Bloomberg's 5 things to start your day in here. So Trump trades as well. Financial markets reopened. Trades that anticipate the Republican turn of the wires gather momentum. The dollar and US stock futures up. Treasuries fell as trading kicked off on Monday, with long-dated bonds leading losses against Trump's fiscal and trade policy was spur growth. So this is like a pro-economy trade, right? So buy equities, buy the riskier asset, sell the safe haven. So long-dated bonds leading the losses on Trump's fiscal trade with spur growth. Hence, we say that saw the yield on 30-year bonds rise above 2 year for the first time since January. So that's a flattening of the, a steepening of the trade, because we've gone from an inversion to steepening. So steepening of the yield curve in here with that move. Jerome Powell speaking today daily. We've already spoken about that as well. What else do we have? Google parent was talking to acquire cybersecurity startup Wiz. Is it going to impact the markets we're looking at? Probably not. Bad day for the luxury sector. Burberry slumped as much as 15% in Europe in here this morning. Swatch Group sales the most in 4 years as well. And the other mining stocks down as the Chinese economic growth figures in here this morning. We did get those. They're not on the calendar there because they were probably dropped in under yesterday's calendar. So we go here we go. So you can see a lot of red in here from the Chinese data, GDP data, industrial production data was actually better, retail sales data in red. So a negative overall, this big host of data that we have out of China, they tend to drop all their data at the same time. So all this data we had on the overnights in here, negative, and for obviously for the China stock market in here and for the Chinese economy, but also pulling down mining stocks because they tend to be more sensitive to the state of the Chinese economy because China a big importer of raw materials. And there's more on that there. Chinese economic growth comes in worse than expected, as in pressure on GB expansion, slowest in 5 quarters, demand struggling. So there's that data here. Here's what we spoke about already, the Trump trade, US futures. When it says US futures, it's meaning equity futures. So they're up as traders digest geopolitical shock. S&P futures rise following shooting, etc. It'll create a floor and volatility moving forward. Futures rise at higher odds of Trump victory after shooting. And US futures gain 10-year yields up. So the long end going up, short end staying pretty much where it is because long end more susceptible to the economy, remember, of the yield curve, short end more susceptible to interest rate moves. So are the Fed going to change what they're doing because of Trump? No. Is the economy potentially going to be more positive? The market certainly thinks that because Trump is going to be more pro-economy, pro-US as well, with potential isolationist policies. Trump steepens the yield curve in here. China's economy judders. So just recapping what we've already spoke about there. So here's obviously we're not expecting anything at this end of July meeting. If we look at September in here, 90% chance. Sorry, no more than that. Sorry, because we've got 5.7%. So 94% chance of rate cut in the September meeting by year end. Now though, look, so this is for only one cut by year end, and then only a 6% chance for only one cut by year end. The market is now pricing in 94% that we get 2 cuts. And now if you look in here, 51, there's more chance. We've got 54% in here that we get 3 cuts. This is 3 cuts or more. So from here and to the left, okay, from the 450, 475 and left. So much more chance in here that we're going to see 3 rate cuts in here getting priced in. So 1 at each meeting, September, November, December. And if we go to the November, just for completeness in here, you'll see for 2 rate cuts now, more chance for 2 rate cuts by the November meeting. Let's just run around stock markets globally. So Hang Seng getting pulled down in here by that negative Chinese data in here. Nikkei also down in here on the overnights, 2.5%. European exchanges lower. We've already spoken about that. Miners pulling that down to some extent in here, and also the luxury goods market in here, Burberry, etc. But we look at the US futures in here on the overnights, all up in here between 4 to 6 tenths higher in here across the major indices on that Trump trade. Belief that Trump will now be victorious in the US presidential election in November. There's the yield. So here's the slight backing up on yield. So we moved lower last week and stayed lower at the end of last week, but then nudging back higher in yields. That's the 10-year yield. And a quick nod to my financial for the technical analysis. So on the stock side, we remain bullish. We obviously had that correction back on Thursday, a deeper correction really on the NASDAQ, but then a decent rebound Friday, and obviously rebounding again today. Markets now hovering back up, either up at or close to the highs that we posted last Thursday, straight after the CPI data. So can't say anything other than bullish in here. If we go and particularly look at the 10-year, we've had this strong turnaround now, pointing higher, despite the dip back lower. Bond prices are still pointing to the upside, so looking for higher bonds prices, lower yields, and that should be supportive of stocks going forward as well. All right, guys, I'm not going to go and delve into the charts. We've been going sometime, nearly 20 minutes now. I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with you on Tuesday for another Bull versus Bear webinar. Bye.